Good evening, everybody. All right, I just got all the bugs worked out of the system. Carjacking, all right. There you go. So, yeah, they won't even get that car out of town, right? Okay, we can see the obvious, which obvious to us is the fact that the Dow continued to trade above the T-line. Let's see. No, they're supposed to be red and green. Is I think we had this problem before when I changed or upgraded, not upgraded, but brought back the system. Is everybody else's red and blue, or is it red and green? But red, blue on negative candles. Huh. I don't know what the answer is. Um, what happens if you log off real quick and log right back on? Blue, red. Huh. Blue, red, blue. Jules, I'm colorblind too, which I'm colorblind on red and green, which makes it pretty bad when you're driving. You're looking for stop signs with a background of evergreens. Let's see, what did we do last time that corrected that? Let's change charts. Let's try that. As you can see, the Dow is still above the T-line. The NASDAQ, kind of a little J-hook type pattern. So what we really want to watch is this level right here. See if they can. Okay, so it may have been just that setup. All right, let's take a look at some of the other stuff. Crude oil. Still trading above $80 a barrel. Gold took a whack. See how it traded off on Friday and down lower today, which told us a lot of the, here we're doing it again, where you can see the gold stocks are starting to back off a little bit. Barrick's gold trading back below the T-line. All right, thank you, Lou. Yeah, so on some of my charts, as you know, they're white for bullish and dark blue for bearish. So you can make them any color you want. Gold, what else? Hog still in a downtrend. Whoops. cattle still in an uptrend. And soybeans kind of doing a J-hook pattern. So this would be one where you'd kind of watch to see what it's going to do at the kind of the breakout area. If it breaks through there, what do we got going on? J-hook, breakout, heading for much higher territory. Would you short gold as in Barracks? Not yet. As you can see, the pullback is, even though it's a pullback, it's indecisive. So it's not like they're selling it off. They're selling it, but then it's not doing it with a very decisive manner. That could be true too, especially if you're near St. Patrick's Day, the green in your shots. Okay, so I'm going to kind of emphasize the fact that we're going to be doing the top rank signals and patterns this Saturday. It's a full day training. So it's scheduled for 4 hours, but we never get out in less than 6, sometimes 8 hours. But what it essentially boils down to is we're going to be taking everything we know about candlestick signals and patterns and applying them to what would be high probability trade setups. So as you can see, there's a fry pan bottom setting up in Crocs. That's why we recommended it today. Because if it broke out positive, it's coming out of this pattern. What was a little bit of additional information? The fact that they did a J-hook plus, right smack dab off the 50, with stochastic still coming up. That was kind of further confirming this pattern. So now what do we expect coming out of this pattern? Well, if that's wave one, and this is a big fry pan bottom, what do we expect coming out of a fry pan bottom? A strong price move, and we could probably calculate it to be somewhat along that same magnitude. AP, I don't know what the heck is going on with these charts. So we can see on AMPX a scoop pattern. And what do we expect coming out of a scoop pattern? This type of price move. So this is what we're going to try to emphasize on Saturdays, recognizing what pattern setups have a high probability. So when we say top rank signals and patterns, it's got two characteristics to it. One, that we can pretty much identify the direction of the move, and two, we're picking up things that pretty much illustrate that not only are we in the right direction, but the magnitude of the move is going to be much stronger than just an uptrending stock and an uptrending market. So what we want to recognize is what creates something, well, for crying out loud. I don't know why these charts are so, let me flip over here to this. What we want to recognize is when there's new illustration of interest coming into a stock. And is it viable? So we can see how we had the bottoming action. Dojis closed above the T-line, hovered along the T-line. We actually closed this position out on Friday because it was a nothing chart. And we bought it back today because it was a breakout chart. So what was significant about this move? Not anything on its own, but the fact that we had bottoming action, and sideways move, and then another move. That told us the bulls are definitely still in this, that the probabilities of an upside move that's not what I want to do. On that breakout move, creates moves like this, putting us in situations where you might have, or the probabilities of being in a big price move are greatly in our favor. So a top-ranked signal and pattern has, again, two major characteristics. One, high degree of probabilities moving in the right direction, and two, the magnitude of the move is going to be strong. So if we see a scoop type pattern, as we saw in TWI, we also know if we didn't buy it today, is it still a good purchase? The answer is, if it opens positive, what do we got going on? Got a doji sandwich after a double doji on a scoop pattern breakout. Where do you think your first likely target? Yeah, let me see if I can pull that down a little bit. How's that? A little bit better? So if this opens positive, now we've got plus, 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 meaning we can see the scoop pattern, we see the bullish signal, we see the close above the T-line, the double doji, and now a doji sandwich. Now, where's our next likely target? Up here at the 200-day moving average. So anytime I do my scans at night, I'm trying to add up all the pieces of evidence that tells us we're in a high probability, high profit trade setup. So I was doing a session for interactive brokers today. And part of that lesson was there's going to be uptrending stocks in an uptrending market. What we want to find is the most strongest, that's the right word. We want to find the most powerful uptrending move in an uptrending market. Or essentially, we want to make as much hay as we can while the sun is shining. So everything that we can add together, so kind of fry pan bottom, there's kind of our bobble breakout, or our, not bobble breakout so much as a J-hook plus. Where do we think this is going? At least up to the 200. Now, is that a huge percentage move? Not great, but this is where you might say, all right, I can either be buying calls or maybe doing some spreads because I have a good idea where the next likely target is. Even though the magnitude of the move may not be huge until we get up here and see what it does at that level. Oh, I'll have to, hold on. I got to write down that I need to call CQG. CQG. All right. And find out why I'm having to type in the S again. All right, so you can see the pattern. Can you review your scan steps? My scans are, CP, very simple. I'm looking for the stocks that had the biggest percent price moves. That's as simplistic as I need because I recognize all the signals and patterns. You can also set up your scans to say, I'm looking for all the dojis that formed today with stochastics below 20, so they're in the oversold area. Or I'm looking for all the kicker signals that formed today. But I can go through because, and this is where everybody should eventually get to, where you can recognize the signals and patterns just instantaneously. So if you look at this chart, what should you be able to recognize right from the get-go? Well, the first thing I would say is there was kind of a resistance level right here. There was kind of a wedge formation. There was kind of a slow curve. And now there was a breakout through this level. Oh. Display. Okay. I think I got rid of that. All right. So recognizing all this, the slow curve, the resistance level, wave 1, wedge wave 2, going into wave 3. Let's see what else we got here. You can see the fry pan bottom. Now this is where the T line becomes a very effective trend indicator. You might initially see the pattern breakout. Now how long do you hold on to it? Oh, where's that thing come from? How long do you hold on to this? As long as it stays above the T line. Where would we sell? We saw a bearish signal and the next day it closed below the T line. Now the reason for that is our emotions. And the reason I can teach this so well is being one of the worst investors in the world before candlesticks came along, I was just happier than a pig in doo-doo that I could start seeing when it was time to buy. But then my emotions still crept into everything. Sell signal. I know that's a sell signal. It's time to close it out. But when the T-line came along, I had an added dimension to keep my emotions out of my trading, that if we become confident, or you become confident, that the T-line is a very strong trend factor. Sound is intermittent. Is that the same case for everybody? That kept me in trades as long as it stayed above the T-line. Kept my emotions out of my trading. All right, Hog Driver, you might log off and log back on and see you can get a better connection. So we're looking for the strong signals, the best friend signal. We're going to probably spend a good 20, 30 minutes just on the best friend signal, knowing what to expect afterwards. Very simple. You've got to kind of gap up. What's our trading strategy at that point, seeing positive confirmation? You just stay long as it stays above the T-line. Weight watchers. Just stay long until you see a sell signal. JP Morgan. Now, I had a question today in the Interactive Brokers training session where they said, well, what if it's earnings that's causing this price move? And the answer to that is it doesn't matter what's causing the price move. All we're doing is seeing what the reaction to whatever is being announced, telling us what the investor sentiment is. If JP Morgan had good, strong earnings and it moved up here and then closed down here, well, that told us there was as strong a reaction to it as what we would expect. What we want to find out is what is everybody's decisions based upon that announcement. Now, the only place that you want to be a little bit more careful about a strong signal because of an announcement is if somebody upgrades a stock or downgrades a stock and it creates a signal. You want to be a little bit more skeptical, doubtful, because all that's really doing is creating a little imbalance in supply and demand, because everybody who happens to be following that company, that analyst, they're making their decisions, but it's not changing the investor sentiment of the overall price of that move. So sometimes when you see an uptrend and somebody downgrades the stock and for a day or two they sell it off, then it's more than likely once that supply of sellers is out of the way, it turns around and heads right back up again. Okay, let's see what else we got here. We know the artificial intelligence stocks are in the limelight right now. So this is why you want to watch to see what the patterns are. Now, just because it's in the limelight and being talked about favorably, that it could be changing the history, good or bad, or the future, that doesn't necessarily mean it's going to go up forever. Remember a year ago when the electric vehicle stocks were just running like scalded dogs? Well, the prices ran up until the other side came in, that a lot of the little electric vehicle stocks that were running big now also ran into the reality that Ford, GM, Volkswagen, a bunch of the biggies were also getting in the electric vehicles. There's going to be a lot of supply out there. No, remember, just because you see a formation, where is your stochastic? So they're still heading up. What is the strongest signal? The fact that you're coming up off a best friend signal implying this. So all this did was told us they consolidated a little bit and they came back up near the end of the day. So what would that tell us? Well, if it opened positive, now what do we have? We got a doji sandwich after your best friend signal. Where do you think the first logical target's going to be? Up in this area. So BBAI, yes, has a good looking chart. Sound, nothing yet. But notice what our signal was. Look at the inverted hammer that bounced right smack dab off the 200 and then opened positive. Remember what our inverted hammer statistic is? You see an inverted hammer and they trade positive the next day, the probabilities are, what I say, 95% or even greater that you're going to be in an uptrend. So now what do we look for? We want to see if it can kind of break out through this congestion area. Bill, that's right. So you've got the technology. Get off track here a little bit. I'm one of the speakers at the MTA 50th anniversary in New York City at the end of this month. So I'm going to be talking or scheduled in between Bob Prechter of Elliott Wave, John Bollinger, Ralph Acapora, a bunch of other people that are big names, Mass Transit Authority. Now it's the certified, you can, in this day and age, you can get a CMT, which is a certified market technician, which is the same thing as a CFA, which is a certified financial advisor. Certified financial advisor is more of a certified that you know things about fundamental analysis, where the CMT is you're more technical. And about 50 years ago, Ralph Acapora kind of pushed Wall Street to say that your narrow-mindedness is that you think your fundamental analysis is the only thing that is worthwhile, whereas technical analysis also is a very, CFP is a certified financial planner. So anyways, could you autograph my, oh, I actually consulted with Enron for about almost a year prior to them going under. So I always tell people it wasn't because I was there that it went under. After I left, it fell apart. So anyways, now what was I saying? I forget. I had a point to make, and I can't think of what it was. I'll think of it. So so I'm got a couple articles going into I think Stocks and Commodities and Traders Magazine saying that I think long-term investing has become obsolete for two reasons: technology and information. First of all, the technology right now is moving so fast that somebody that might be leading their sector this month and 6 months from now may not have the technology or have slightly obsolete technology and somebody else's technology and information. It used to be that if they were going to report a rate increase by the feds, well, you've read about it in the Wall Street Journal. You might have seen a blurb on it on the 1 hour news in the evening, but most people wouldn't even pay attention to it. Well, now when the feds are ready to make an announcement or anybody else makes an announcement, there are millions and millions and millions of people seeing what that announcement is and reacting to it. So it's not like things take a long time to react anymore. So I know some people will say, well, what about holding things long term like Apple or Amazon or Tesla? Yeah, for each one of those that you could mention, there was probably hundreds that somebody advised holding long term that never made it. So anyways, got off track, didn't I? Okay. Bullfrog AI, you can see kind of the bottoming action, especially with a series of dojis. So what does this information right here tell you? That there is a bunch of new information or new bullish sentiment coming in. So that becomes an alert that now we should be watching to see what that chart is telling us. So getting a CMT allows someone to do the same thing as a SB. I don't know if that's the case. Now, I know there's a lot of people out there that have a CFA and a CMT that are financial advisors. So I guess it becomes some sort of a qualification that you've studied. And I never did it because years back when I belonged to the CMT, I never took the test for two reasons. One, I thought I knew everything and I'd look pretty stupid if I failed the test. And two, I figured, shoot, I'm just teaching candlestick analysis. I don't need to be certified in everything else, because what it boils down to is we're already learning everything else as far as Fibonacci retracement, Bollinger Bands, trend lines, moving averages, things that things that we are not trying to learn them. We're learning them because they become a qualifier or additional confirmation. That the signal and patterns working them, thinking and talking. Where was that, Robert? On interactive brokers? All right, so what we're looking for is this type of situation. Fry pan bottom, best friend breakout. Oh, the CMT, okay. Are you going to be at the New York anniversary? There you go, the CRT. So here's very simple trend analysis. You just stay long until you see a sell signal and a close below the T line. That takes all the emotional distress out of your trading. Using those simple rules just allows you to move on, stay in that position until you see a sell signal. So what we're kind of looking for, or what we want to recognize, is look at your fry pan bottom, look where the break, then we can see that it did a trend kicker signal. So what's that tell us about our breakout? That it's still fairly strong, you just stay long until you see a sell signal and a close back below the T line. So what we're essentially doing is just adding up the different indicators that tell us we're in the right direction at the right time. Your best friend breakout, your stick sandwich, now you're 45-degree off of that signal. And this is what really boils down to, what do you do to put yourself in situations where the probabilities are much greater in your favor? Kind of your J-hook bobble breakout on Weatherford. What's our trading strategy here? Well, if this is wave one, we would suspect wave three is going to bring us up here. Is this a bad hair day? Yeah. Bearish engulfing. Now at least we have a little bit of, so if I had one which is just a steady uptrend, I'm spending 3 to 4 seconds analyzing it and moving on to something like this and say, oh, I better take a look at this. I better have a plan of action tomorrow. If this opens lower tomorrow, they're probably coming back to test the T-line. Let's close out this position. So we always wait for confirmation, second day closing after one signal. Not necessarily closing. First of all, if we're going to be a buyer, and we can see right here, oops, we got a potential of a bobble breakout J-hook. What would be a good confirmation? Doesn't matter where it closes, or what we're looking for is how is it going to open? If it starts gaps up and starts trading positive, what have we already concluded? That our J-hook bobble breakout pattern is working. So that becomes a good confirmation to be buying. Now, what would get us back out of this trade on that day? Well, if they took it up and then all of a sudden they came back down through the open, as soon as it came down through the open, what color is that candle? It's starting to turn red from the open. And what's that imply? That the bears are still in control. This is not a good trade. Close it right back out. So if the question, FC, was if this opened lower tomorrow and started trading lower, yeah, I'd probably close it out because that's a bearish engulfing signal toward the overbought area. It's likely to come back down to test the T-line. What's our worst case scenario? It comes down and then turns around and starts heading back up. Well, if we closed it here and the next day we bought it back up here, all right, that was just a little opportunity that we lost some profitability, but we didn't lose very much profits. I You can see what this is doing. There's your fry pan bottom. Now, that might not be a hellacious percentage move, but it's a high probability move. Apps. There's your fry pan bottom. What's our trading rule on a fry pan bottom? You stay long as it doesn't close below the T-line. I'm trying to... Well. Net. There's our support, kind of a J-hook plus right off the 50 and the T-line. Then they gap it up. So what does that illustrate to us? There's a lot of bullish sentiment on this. How long do you hold on to it? Well, you stay long until you see a sell signal. Now, does that mean you wait for it to come back to the T-line? Not necessarily. At this point, you've got a doji, and we know what the doji rule tells us. We want to see it open positive. So where would we not probably want to see it trade in tomorrow's trading? Probably wouldn't want to see it trade back below the low of this doji, because that would tell you, oops, they're running out of steam up here. Kind of the same scenario here. Strong up move, but now we started seeing a dark cloud, shooting star, bearish engulfing signal. In the overbought area, we still haven't closed below the T-line here, but what's this now starting to imply? That the bears are starting to take control. On a day like that day, probably would say, even though it hasn't closed below the T-line, I'm going to close out the trade and probably not bother with it until it comes back up through this level. Because this is all starting to tell us a message. The sellers are starting to take control up here, especially in the overbought area. Kind of the same scenario over here on Bohr. Bohr kept trying to move up, but then over the last few days, you could see what was happening. You're starting to see selling. Now remember what kind of the common practice is. If this is an uptrend and they try to take it back up, if they fail to get up to that high and start rolling it over, that means everybody's seeing it's kind of running out of steam. It means our uptrend's over. Let's go find someplace better. So these are all little kind of intricacies that you start seeing sell signals close out. Now, the reason that is important is because most people, like myself, would get married to a trade. But if we bought down here and it was a good profit, oh man, it could be a bigger profit. I was hoping this would go up higher instead of looking to see what the chart was actually telling you things are doing. So this is where that side, or that whack on the side of the head, pretty much told you, let the charts tell you what's happening versus what you're hoping is going to happen from here. Hecla. So Bivy we bought. It looked pretty good today, except it closed back down here at the low end of the range. It's still above the T-line. So what would be our trading strategy tomorrow? If it opens lower and trades lower, close it out. It means it's fizzled. It might be coming back down to the 50 to bob along there, but that means it's not a good bullish chart anymore. So essentially, every time we look at a chart, we should be thinking in the back of our mind, is this the best place to have our money? And I know some of you are watching the Pirates game, and McCutchen just hit another home run. So if this opens lower, even though there's possibilities of it going higher, got to ask yourself, is that the best place to have your money? No, let's move on to something else. I always come back to the statistic that there is 9,500 trading entities out there. And if you see something that's not working anymore, close it out, because there's going to be plenty of other trades to put on. So look at our slow curve, breakout. Look how far away you are from the T-line with a long-legged doji. Perfect time to take profits, thinking it's going to come back to the T-line. You can always buy back, and you can hold on to it until when? Until you see a sell signal on the close back below the T-line. This is the process, or the visual process, to get out of trades that aren't working. Dang. Yep. Thought I had a better illustration. Amazon looks like it's trying to do the slow trend. Oh, that's what's happened. I flipped over here to the biggies. Apple, son of a gun. Apple's still in a slow uptrend. Notice the kicker type signal that brought it back up above. So what are we watching now? Seeing if it can get up through this level. Netflix. So here's that rhetorical analysis. Which way is Netflix going right now? You look at that chart and you say, I don't know whether this one's going up, going down, or sideways. So that puts it in the category of, yeah, if it's sideways, we don't want to be trading this right now. We might want to trade it in a week from now or 2 weeks from now, but right now we want to have our money at a better, Netflix has earnings tomorrow, all right. And Google, kind of that same rhetorical question. If you were looking at that chart, what would you be thinking as far as the overall trend? Can't really tell what they want to do with this. Let's move our money to something else that has much better prospects. So the better prospects are ones where you can identify the pattern and the bigger pattern. Here, say you have a bubble breakout, fry pan bottom. And if you can see that that whole sector, what the heck? If that whole sector is starting to show a little bit of strength, now obviously AI isn't showing a lot of strength just yet until it gets above the T-line. But when you start seeing a lot of the other ones starting to show some good interest, for mercy's sakes, I know I don't type that. There was your indication that things were changing dramatically. Now, why do we show people these type of charts? Because it doesn't take very many where you get in at 5 and maybe get out at 17, you get back in at 17 and you get out at 35. That's what greatly improves your returns in your portfolio. You've got to decide, FC, if that pattern is broken out. That pattern looks like it's broken out. Not really. It looks like it's just now starting to break out. So would I be afraid to be buying this one on positive trading? No, because what are we expecting? Number one, a bubble breakout usually infers more upside, and a fry pan bottom usually infers more upside. So that would tell me, I'm in a bullish chart. I can still be buying this one. Okay, let's see, where am I? So the nice thing about having a chat room where everybody's kind of looking for the same patterns, look at your double bottom, fry pan bottom, BWE or BWEN. What's this one tell us? You could be buying this one on positive trading. Notice kind of your power reversal. Oh, let's see. The solars had good bullish activity. So the only one that had a good true signal was First Solar. But some of the others, even though they traded positive, really don't have what I would consider any great bullish move. So if I can't see a real strong reversal signal until they break it out, yeah, there's probably a lot better places to have your money right now. So add everything up. There's your doji sandwich, gap up best friend. After a left-right combo, kind of a double flutter kicker signal, or double doji sandwich, breaking out through this level, kind of a rounding bottom. What's that imply? The bulls are definitely in control on ENPH. And our kicker expert, Magic, identified morph today, a kicker signal. Anytime I see a kicker signal, that's going to be on the top of my list of watch to see how they open this tomorrow, because that tells you there's been a definite change of investor sentiment. Oh, for crying out loud, come on. S.ROIV. Darn. ROIV, another kicker signal. Same scenario. Want to see how this opens, because that's usually the implication of a very strong uptrend in progress. Let's see. Things like, this is starting to bug me. I got to figure out why this is happening. Fry pan bottom, what was the additional confirmation? Look at your doji sandwich. What do we know about a doji sandwich? More upside. What do we know about a fry pan bottom? Strong upside. So this is definitely one where you want to use that doji sandwich as additional confirmation to your fry pan bottom, RVMD. There's your doji sandwich breaking out through the 50, kind of a fry pan bottom, another one that's implying more upside. So the fry pan bottom has breakout levels that are very visible. Kind of right where the pattern started, where it started getting indecisive. Now we're right at a breakout level, which says, all right, do we want to buy something in the overbought condition? We do, knowing that it's a pattern breakout. Remember, we're looking for buy signals in the oversold area. We're looking for pattern breakouts that are usually occurring when the stochastics are already up in the overbought area. AM, Morningstar signal, double doji setup. Breaking kind of this resistance level. High probability up move. Earlier today, you had one stock that had a big gap down Friday and a doji today. You said if it opened down today, it's okay to short it. Do you remember the symbol? Oh, I can't remember all those symbols. SPR. If this opens lower tomorrow, after that gap down, there's your bearish doji sandwich. Fry pan bottom trading rule. As long as you're above the T line, you stay long. CTRX. Well. I have done something severely wrong. CTRX. I don't know what I've done wrong. Whoops. TCVX. So there is your doji. Gap up. Morningstar signal. How do we trade this? Using the doji rule. If this opens positive and starts trading positive, you can buy that 45-degree prospect. So anytime we see signals or patterns, there's our best friend signal on XPEV. If it opens positive, what's it telling us? One, it's confirming the best friend signal. Two, it's breaking out through this level. Three, where's the next target? Up here, where everybody's watching. Will applies to the fry pan bottom especially. But it applies to most everything except for the caveat that when you move too far away from the T line and you see a sell signal, more than likely it's going to come back and test it. So the further away you move from the T line, the more attentive you become as far as watching for reversal signals. So there's your J-hook plus. This is why recognizing, no, it doesn't matter what kind of doji it is. Oh, sorry, I was daydreaming. This is why recognizing the bullish harami tells us selling has stopped. Where? Right at the 200-day moving average. What's that pattern? A J-hook pattern. Why do we call it a J-hook plus? Because it's occurring right where everybody else is watching it. Remember, the ENPH is a bobble breakout because it's broken through the level that everybody else is watching. And MRUS, there's your bobble breakout. So anytime you see this type of setup, you start looking for aggressive trading because that's where we see the pattern breakout, but everybody else is watching to see if the 200 is going to act as resistance anymore. So anytime you see a chart like this, if I got lucky, was buying right here for whatever reason, and it went here, what do you think the smart money is going to be doing? Somebody's going to be taking profits. And where do we think to take profits? The 10-minute chart. And there is the mechanics of what our T-line tells us. I'm buying here, here, here. Now look where I am up here. Not only on the daily chart are we a huge way away from the T-line, but the 10-minute chart is showing us we're a huge way away from the T-line. That's where we start getting more attentive. So even if this isn't showing selling, that might bring it back here, I just flip down one more time frame. I flip down to the, oops, this is the 10-minute chart. You can see where it did a doji up here away from the T-line. The daily chart was hugely away from the T-line. Where do we think it's moving back to? Well, it could be moving back, so let's flip to the 5-minute chart. 5-minute chart says up. They're trading the 5-minute chart below the T-line. Let's get ready to take some profits. Now, could you be taking profits too early? Who cares? You bought down here and you just tripled your money. Remember, people are happier than a pig in doo-doo to make 10% return on their portfolio with money managers holding or doing the management. If you can triple your money in 45 minutes, take it and put it in your pocket. Let's see. I had another. Oh. So when would you take profits here? Well, the 10-minute chart or the 5-minute chart, whoops. 10-minute chart really didn't show. Maybe right there it'd get a little bit nervous. But because of the strength, if they started trading lower, yeah, maybe take some profits. Want to see what it does on the next time frame. And then look where it closed. What did that tell us about the strength? It told us they were still buying going into the close. More than likely, there's going to be more upside. So that's a good time where you go back and do the rare process and say what moved that price. Here is a high probability trade setup. Look at where the little Morningstar type signal occurred. Right smack dab on the 50. So anytime I see this type of trade setup, I know it might not be wildly exciting, but the probabilities are going to be extremely strong. BIVI might not be wildly exciting, but the probabilities are going to be pretty strong that we're heading in the right direction. Now, doesn't mean it's going to work every time. That's where our next analysis comes into play. Where is it as far as it staying above the T-line? Whoops, it's already 9 o'clock. I thought I had this a short session. Here's another gap up doji, RAPT. What's our trading plan? If it opens positive tomorrow, can be buying. So not only do we have good evidence of a bullish trade, but there's our bearish left-right combo on 5 and below on a bearish trade. This is what you call observe the obvious. There's your bearish Harami right here at the 50. They can't, I'm sorry, at the 200. They can't get through it. Now they're selling it off. What do you think the overall trend of this one is likely to be? You're in a downtrend, wave 1, wave 2. Look for at least to come this level or maybe even down to this level. So again, I always reiterate, this is not rocket science. This is because human nature's price movements work the same way time after time. So what we're going to be doing this weekend is finding which movements, which price moves are going to produce not only profitable trades, but the biggest profit trades. Okay, that's about all I got. Are there any general questions on candlestick analysis? I constantly get feedback, which I like to see, where I know I'm eventually getting through to some people when they say, my trading visualization has improved tremendously because of candlesticks. And it's not because there's any formulas or any calculations. All it is recognizing what normally happens in human nature. So I guess with that, Jim, let's go ahead and do the double line. And then in 3.4 seconds, let's do the next double line. You can please talk about the upper and lower shadows. Nothing to really illustrate that if you start seeing a lot of upper shadows and they show a lot of upper shadows to the upside and then backing off, that means the bears are starting to take control. You see a lot of shadows on the bottom side, it means the bears knock it down and the bulls are stepping in, get ready for a reversal. More than likely, they're going to create candlestick signals. So Nova, all you can do here is stay long, making sure it stays up above the 200. I don't know what I am doing here. This one you can get ready to go short. AES. Doji sandwich to the downside. Again, observe the obvious. Where did they run out of steam? Right smack dab at the 200, which is where everybody else is watching. PRST. Oh, man, oh, man, oh, man. This one, you see the best friend signal. What happened late in the day or by the end of the day? We got a strong price move with profit taking. Now we know that if this opens positive, the profit taking's over. That strong price move is still in progress. Another one you could go long, not anything real exuberant, but it needs to break out of this resistance level. Whoops, I didn't scroll. LAVR. That one you can get ready to buy. Make sure your volume's good. Doji, 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 doji. Start getting ready to buy. Where's the likely area? Right up here in the gap area. CBAY. That's another breakout fry pan bottom. If it opens positive, what's it doing? It's confirming the fry pan bottom breakout and breaking out through this level. Square. Oops. That's soybeans. S dot square. Stay short. Oops, Tim, you were ahead of me. Sorry about that. Stay short. Oh, cat. Shopify you can buy. It's not anything dramatically exciting, but if it opens positive, you've got kind of a J-hookish pattern. Fro, that one you can buy. Kind of have an island reversal. If they get up through the 50, look for it to head back up to this level. I'm slowing down here because the darn cat is sitting right between me and the keyboard. Now she's sitting in my light. We're going to have a cat auction again. Lowest bidder. Oh, come on. S dot LTHM. Be ready to buy this one. PLL. Get ready to buy this one. And this one we're watching. After it hit the 50, I'm sorry, the 200s pull right back to the 50. If this starts trading back up, now the cat is chasing the cursor. This is just makes you want to kick your grandmother. Come on, cat. CLSK. Oh, you're coming over here, kitty. Over there. Stay long. Look at your Morningstar gap up. Just stay long. Right now, I'd have a safety stop probably right there. If it came back down through there, the sellers are starting to show up. GDX, this one should have been closed out today. Anytime you're in an overbought condition and you see them gapping it down, I can't. Below the previous day's bullish candle, that means the sellers have taken control. If this opens lower tomorrow, again, yesterday it opened lower but came back up, green candle. Today it gapped down again below the previous day's open. Make this bigger. That would told me up the sellers are taking control. So if I was long, first I'd want to see what gold was doing first thing in the morning. If it's trading back up, gold stocks may hover. If it's trading lower, you're probably seeing more selling. Newmont Mining. This is not right. S.NEM. Newmont Mining should have been closed out on Friday. There was that move up. If you didn't close it here, you would have closed it here because now it was gapping back down. Microsoft, usually not a big trader, but right now if you're long, you can stay long. Again, the T-line rule. RXT, kind of a fry pan bottom. I'd be more apt to trade it if it gets up through the T or through the 50. ELON, another one you need to see more strength. Needs to get through the T line. What's the significance of 3 dojis in a row? If one doji means indecision, more dojis means more indecision. Which one were you referring to, Robert? Occidental, you should be out of this one. Probably wouldn't be going short, just not a good chart, just wouldn't be going long. Oh, and if you're going short, figure at least it's coming back to the 50, but it probably wouldn't be the most dynamic short just because of the lack of magnitude of move to the downside. Stay long on XBI. Trend kicker, yes, trend kicker. So now you want to watch to see what happens once if it touches the 200. Brown and Brown, just stay long. J-hook, tight pattern up through the 200. So if this is wave 1, this is wave 2, what does wave 3 imply? That it's going to stay up above the 200 and break out through this level, which makes your trade entry very simple. If it opens positive, you can buy it immediately. You just don't want to see it close back below the 200, which gets you out immediately. So that prospect of cutting your losses short, letting your profits run. Doji sandwich, break out through the 50 and the 200, just stay long. Doji sandwich on UBX, just stay long. So you've got a head start. If we wake up tomorrow and gold is down quite a bit, yeah, you get ready to short this because it's going to follow through. So the head start is being able to see what gold is doing before the market's open. Let's see. Went up through the T-line, but you said it needs to up through the T-line. Yes. Look where it closed. Right at the, or I'm sorry, not the T-line, the 50. I may have misspoken. So it closed right at a level that everybody else is watching. So it needs to open positive. If it opens lower, what's it telling us? The 50 is acting as a resistance level. Didn't I? Well, you could go long. Yes. YM, I usually don't aggressively look for short sectors because of the overall market trend moving positive. So I'm inclined to look more for the bullish sectors. Now, that doesn't keep me from identifying bearish trades. So if I think the market is heading higher, maybe I have 8 positions on long and maybe 2 positions on short, but it doesn't necessarily mean I'm aggressively looking for short sectors. Twist, that is a doji sandwich, breakout through the T-line. Simple. You can buy this on positive trading. Just don't let it close back below the T-line. All right, so we definitely want to see how the markets open tomorrow. Still want to use the T-line as your stop. All right, so with that, we'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.